This morning, we welcome Toby Lawson, who's the managing director of Newedge Financial Hong Kong and also the regional head of financial futures and options. And Newedge operates a joint venture with CITIC, which is one of the companies involved in these futures contracts. Toby, good morning to you. Let's talk about this change. April 16th is the big day. Now, it looks like not every investor can get involved. Obviously, there's a big, you have to pay cash up front, which is equivalent to maybe 15% of the contract value. But how big do you think this business will be for you?
Oh, I think the business is going to be very big. I think it's a significant moment in the development of the Chinese capital markets. The Chinese regulators have been very reluctant to push into the financial futures area, mainly due to some historic elements that occurred for them in the financial futures back in the 90s. And so the CSRC were about 9 years ago talking about an equity index product to be launched. And so it's now April 16. The date is set. That certainty is a very significant thing. It'll be very positive for the market. But as you mentioned, there are restrictions. And the reason that is because the CSRC, the regulating body in China, are very concerned about investor protection. And as a result, they move very judiciously towards the launch and put in some pretty strict guidelines. You mentioned about the amount of cash down. You're looking at about a threshold of about 500,000 won, which is about 75,000 US to open an account. And also the margin rates are going to be 15 to 18%. So those who want to trade the CSI 300, the new index, need to know what they're doing. Yeah,
they need to know what they're doing. In fact, I spoke to one investor about this introduction of margin trading, short selling, and futures contracts, and they said really it actually introduces more risk for the Chinese investor because it allows a new gambling tool for them.
Well, I think the way in which the regulatory authorities see it and the way in which they've approached the launch of it is to ensure that they avoid that speculative element, particularly within the retail sector. You know, investor protection is very important for them. So they've made sure that those who want to trade the contract need to pass examinations, which will be run by brokers like ourselves, like CITIC Newedge. We'll be handling those examinations and also some mock trading activities that they need to pass before they can actually trade. But importantly, the development of China's capital markets, it's important that they have hedging tools. If it's a one-way bet on the stock market, then it creates actually systemic risk one way. So having hedging tools to allow them to hedge that long exposure is very important.
Toby, I just want to show a chart here which shows how important these may be in the future. This is historical volatility of three indexes, the CSI 300, Hang Seng Index and S&P 500. As things stand, the CSI 300 is the most volatile on a historical basis, Hang Seng second most and S&P 500 third most. That wasn't true through the financial crisis as it happens. Spike in volatility for the Hang Seng and for the S&P 500, not so much for the CSI 300. But traditionally speaking, normally you'll find the Chinese stocks are more volatile. So you need hedging tools like this. Now, Morgan Stanley says transaction volumes may be boosted by 50% in the sort of medium term because of the introduction of these. Do you see that kind of growth?
Not initially. I think, to be fair, the way in which the regulatory body is launching this product means that it's more likely to be small steps. The benchmark for success of the contract, if you will, is ensuring that it works, ensuring that it's established well and that the systemic operational elements behind are smooth. That is their major concern. Once that comes in, I think the tightness of the controls, the attractiveness towards the end, particularly the foreign investor coming in, will accelerate. And I do probably suspect that 50% is not unreasonable, but not in the immediate term.
And down the line, mini contracts, options, that kind of thing. I mean, how long will it be before we get those kind of instruments?
It's a tough question, how long, but I do believe that mini will, if the contract works, as you've seen in Korea and Taiwan, both markets were predominantly retail-based, and they have been successful in launching futures contracts. I think that bodes well for the CSI 300.
Yeah, you mentioned Korea and Taiwan. In fact, it looks like you know, the international experiences there really show that the futures markets actually may grow several times what the physical market is. And you said initially it might not look like much in terms of gains, but how about over time? What's the potential here?
The potential is unlimited, I think, in a sense, and I don't want to be too optimistic, but China's such a big opportunity in the capital markets, but it'll happen over time. I think the mainland have been quite clear in their approach to the development of anything strategic. The need for speed is not one of them, and they will do it judiciously. They'll do it in a way that ensures success.
Okay, the need for speed is not exactly what they're looking for right now. Thank you for that, Toby. Thank you for dropping by. Toby Lawson, Regional Head of Financial Futures and Options at Newedge, joining us.